Hello, Warriors. How you doing, Bran? Michael Weissman, Sinatra. We've got Paul here today. Everyone doing okay? Congratulations to Ryan on really being in the zone. So, good morning to you, Ryan.
Morning, mate. You all right?
Nice buy on yen yesterday after the report down here. Real nice trade. And really your home run ball, once it got through that daily moving average that we talked about yesterday, really flew. Hey, Steve, how are you? How you feeling?
Better today. How have you been?
Pretty okay, for an old man. Not bad. So, Ryan, why don't we start off with numbers, spark the sell-off in cable?
Yep. 3 guesses what that was. Inflation data coming in softer.
All right.
Yeah, giving the pound a bit of a slap. As expected, those rate expectations have been kicked around the chops. We went from pricing a 50 to pricing a 25, from expecting a peak at 6.5, 6 3/4 to a peak under 6%. It's the usual running from one side of the boat to the other. But, I've been mourning how excessive those rate expectations have been getting, and hence why I wanted to short the quid.
Yeah, and that's also you said that a correction in cable, you could be like a couple hundred lower in a hurry, and that's exactly what happened here. Do you think this is a major top or a pullback for another run?
I think cable I'm not so sure about, because there's obviously a lot of dollar involvement, but I think it's going to be a significant top for cable. I think it's going to be a stronger top for the pound versus the euro.
Yes, I mean, my trade selection yesterday, and I should know better, with euro pound on a verge of a breakout. I mean, it worked for 40 pips, but I have pip envy, not being short cable instead of euro. So anyway, euro still stiff. The commodity currencies continue showing their relative weakness, not even being able to take out the Aussie, taking out the June high, looking okay. And so far, the loonie still holding the low from last week. Looks like, I don't know, this is a daily, so maybe we're getting some type of flag. Yeah. So we get through here, we'll get a nice continuation move, it looks like to me, in the loonie. So
we're trading peakness. We're trading peakness for interest rates. You look at Aussie dollar. We had the last hike, couldn't get through 69. That's your significant level for Aussie dollar. It's been down ever since. All these central banks are coming to the end of their cycles in different stages. The Fed, $145 yen. That's when it turned. That's when the market started getting toppy for peak rates in dollar yen. We've now seen it in cable, probably at this 131 highs. We've seen it in Aussie dollar 69s. We've seen it potentially in dollar CAD 131s. So everyone is setting their level, if you know what I mean. And euro dollar is one of the ones yet to set its level. Is the ECB going to hike next week and then keep September on the table? Is it going to draw September down and maybe go for a pause? If that happens, you're probably going to see a top in euro dollar as well.
Wait a second. Good morning.
You hit a nerve, man.
Wait, Ryan.
We have to wait now.
So you're explaining to us that currencies move on interest rates and interest rate expectations?
Mansplaining.
No. Hey, it's I'm joking. Obviously, I'm a little tongue in cheek here.
You facetious guy, you.
But Ryan, I mean, he's talking gospel here in the FX market. I don't think a lot of people that understand the currency market or they're new to the currency market really understand that interest rate and interest rate expectations is ultimately what drives the FX market. And he's pointing out something that is it seems obvious, like in retrospect, you go, well, of course, but at the time, like right now, it's so important to understand that concept because that is exactly what's happening. People go, oh, why hasn't the euro peaked yet? And the cable looks like it is. Ryan, you're pointing it out exactly as it should be, as you should be. And hopefully everybody's getting the picture. Anyway, good morning, everybody.
So look, and see how the Nikkei is really trading with the yen. They bottomed around the same time and they're recovering at the same time. Only maybe it looks like Nikkei could, make a new high, but we'll see, because the yen, I know that last week, Blake, after we got down here, you wanted to be a seller at your the trend line break up around 141. That's still in play if we get there.
Not quite. A little bit lower. I actually got short some last night. I shorted some euro yen this morning, and I also shorted some sterling yen about 30 minutes ago, about 50 pips ago. So I'm already selling or buying yen. One of the issues that the yen had yesterday, and I closed out all my yen exposure yesterday. I guess it was yesterday or the day before. I think it was yesterday. But hey, Ryan, when did Ueda's comments come out? It came out yesterday, right?
Yeah, it was funny because Dale was talking about me buying the dip on the CPI number. I got in at
that's right.
87.
That was retail sales, wasn't it?
But yeah, retail sales.
And
that started it.
The funny thing was, I got stopped on my trailer. I pulled my stop up behind. I had it at 95, just above entry, and I got stopped out on that, and it dropped. That's when it dropped to under 138 to 137.70, and literally right after that, UEDA came out talking about unless their assumptions change for inflation, they're going to stay put as they are, and that is that big fat blue candle you can see there on the 4 hourly.
Yeah.
And the comments
were again at 95.
and the comments were that they're gonna keep rates, but he didn't say anything about yield curve control, and that's why it's like it rallied. I turned around and covered. I think I was short the Aussie yen, Kiwi yen, and Swiss yen, and I actually pulled like 150 pips out of Aussie and Kiwi. We post all this stuff in the trades room and the ForexAnalytix community, so you can see entries, where you're getting out, where that type of thing. But I got out of those, and I told everybody last night I'm selling into this weakness because I still think yield curve control can still be tweaked without them changing rates. So I think we're actually developing a bear flag pattern. I'll show you guys those here in a little bit.
That's the important thing about UEDA yesterday. Okay, he said that they won't change policy unless their assumptions change. Now, that leaves the door open for next week because their assumptions can change at the meeting. He's not going to tell us that in advance. So there is a bit of a chink of light still for a tweak, but what it's done yesterday, it's changed the momentum for dollar yen. Now the sellers aren't so keen, hence why we're rallying. The data, we saw dollar sold after pretty much every good data point in the US the last 2 weeks. That's now changed. So we've had a bit of a light switch moment in dollar yen. No one's willing to step in front of
light switch
just yet.
I tell you, Ryan's got a million of them. So, we're talking about interest rate differentials being important. There are a lot of people, guys, that are looking for yields to drop like this from here. I'm not in that camp. Are you guys in the camp that we're going to just, head to 330, maybe head towards 3% again? Or could this just be a pullback, and suck people into bonds and so forth, and we get some type of low, maybe here 360, do some fib work, and then start heading up again?
I think rates are going to come down. I think we're this is the earnings season is where where we're going to start to see we're going to start to see stocks roll over here. People are going to start looking for fixed
Microsoft
income.
reported yesterday, and it tore the cover off the ball. I mean, it looked like this was, I guess they came out during the day, Microsoft, or they made some AI announcement.
It was an AI announcement. I don't think it was their earnings. I'm unless I'm wrong. Netflix and Tesla are today after the close. So, and Goldman's earnings came out this morning, which sank the Dow a little bit. But yeah, they talked about how they're going to charge $30 a month for their AI product, whatever it's called. Is it Bard? Is that Microsoft?
I'm not sure. So I saw from a guy, anyone know who Tom Thornton is? But a lot of people use DeMark stuff.
Mm-hmm.
And he tweeted, we're at that 13's where exhaustion, what you're saying, sure is hard to short it. I'm happy when we're just unchanged. That's a victory compared to all the upside that we've had here, and blowing out divergences, S&Ps. I wouldn't really call this divergence. NASDAQ looks a little weaker, but boy, what a freight train. So it's got to be close, because I'm close to vomiting. So you know how that is.
Oh, of course.
Huh?
Of course.
So anyway, I have to run to the bathroom. I'll be right back. What do you think? Do you have any? I know you were talking on some type of formation, Blake, 45.50. I don't know, a week ago when I said I don't think it'll get there.
For the SPOOs?
Yeah. You had something.
I mean,
there.
The S&P, I mean, we're up against channel resistance right now. We're above the 78% retracement. I think these levels are really, it's going to be kind of tough from a valuation standpoint for the markets to get much higher. And that doesn't mean the markets can't go any higher. It's just you start to get really lopsided, I think, as far as, if you're an asset manager, now you're really paying up. So I think it's going to be a tough sell up here. For much more gains, but that doesn't mean that we can't, blow past the highs just from a positioning standpoint. And price action is still very bullish. I mean, it is. It's hard to dismiss that. I mean, here's a couple of charts. I'll just
go ahead. I just was going to show that.
Here, go.
It's cool. Copper. No, go ahead. Go ahead.
Okay.
You have the same line for copper.
Okay.
We're not that far away from that breakdown. One more bad day.
Yeah. Right. Yeah. Well, you
have it down there. Okay.
You could probably do that.
Yeah. That's
probably what you're looking at, right?
Yeah. Yeah.
So, I mean, we have the 618 retracement. We have a double top setting up. Yeah. So a breakdown in copper could really be, it could really set the market off. And
what's it say about global growth? I mean,
it says China sucks, right?
Okay. Yeah. Just China. Yeah. Maybe China, maybe China's the thing that drags us into recession. They lifted us out of it in 08, 09 with their growth, and maybe with their lack of growth, they take us into it.
It could be. You think about like a country, and this is like, I remember when we went, when I was with the, before we got bought by MB Trading, I was with the Wise Trade Group, and we were expanding into China. And so we were in Hong Kong. We had an office there. I used to go there once a year for a few years. And, you sit back, and I just remember just learning more about the culture and about how quickly they've shifted, from a non-middle class to a middle class. And like, it's been an amazing transformation for China as a country. The problem that you have, though, is now you have, the basic demands of an economy that really wants, like, I don't want to live on three cups of rice a day anymore.
What?
Why? I want my chicken. I want my, and I want air conditioning, and I actually want to drive a car, and I don't want to pedal a bicycle
ride a bike anymore.
Yeah, I mean, you know, so now you're in a by design, you're in a consumer driven economy, but when the rest of the world's not spending as much, and then you don't have as many workers that are building as much, because now that all that production is shifted to, or a lot of the production is shifted to Mexico, to India, to Malaysia, different parts of different parts of Asia, not just China. The risk is for the rest of the world, you're depending on China to come back, be bouncing back as a robust economy.
Right.
In a consumer driven economy, it's going to be friggin' hard, when everybody's dealing with inflation globally. So, it's kind of like, yeah, you put yourself here, China, and so now you got a bit of a problem. And so we, as a global economy, expecting China to lift the global economy out of this recession, to help avoid a recession, I think was a little too optimistic. And so now you got these Chinese markets that are really going to come under pressure. And I think the currency, and I know Ryan's all over this, you got to watch the CNH, man. This thing breaks out. That is China directly saying, yeah, we need to weaken our currency to attract Americans and Europeans and everybody else to buy Chinese goods again. And, you start seeing that US dollar CNH pierce like the 8 level or 750 level up here.
I have a rhetorical question for you, Blake. What happens when, or if, probably when, China decides to turn its economy to a consumption-based economy as well, and instead of exporting their stuff?
That's what they've been trying to do.
Right? Yeah, they've been trying to do that for years.
Yeah, I mean, when they successfully managed to transition to that, right? And instead of exporting their goods for IOUs mostly, they start having their people consume it. What happens to the rest of the world then?
I don't know. We all buy India's crap. I don't know. Everybody's going to be shopping in Mexico. I don't
pretty sure that India is not going to be enough to cover the supply deficit that would create, right?
Well, I think it's a long term. I've been watching this develop
it is
over the
a
last
long
30 years.
Yes, it is a long term move. These things don't happen overnight. Absolutely, I'm 100% with you. But they do happen, right? It is a process, but it is an ongoing process that at some point is going to be completed.
Yeah. I hope all they're launching in late August is the new currency backed by gold and not anything else.
Yeah, I don't know what the BRIC economies are going to be able to do. They're probably going to, announce that they're working on something, but who knows? Anyway, going back to China and Steve's question and copper, I think it is a long-term process, and I don't even know if they're fully going to be able to get there in my lifetime. Like, before I'm pushing daisies, I don't know if China is going to be able to make themselves into 100%. Or a more of a consumer-driven economy. I think they might have to revert back a little bit to their exporting roots, for survival purposes. So I don't know. I'm just
everybody should, if we want to be honest.
Huh?
Everybody should, if we want to be honest.
Every country should.
Every country should, because
of course they should.
The path forward having to do with prosperity is not consuming, as we've said before.
Yeah,
there is no person in the world that is incapable of consuming stuff. Everybody's capable of consuming stuff, right? That's the easy thing to do.
Yeah.
The hard thing to do is produce the stuff that people want to consume.
Yeah, I agree with that, and I think the U.S. has been trying desperately over the last 10 years to backpedal and get us to be more of a
reshore,
like a manufacturing society. It's hard though. I go to Middle America sometimes because the American side of my family is from
America.
From Iowa, right? So
that's America.
I have cousins that actually work in plastic plants in middle America, and they don't want to. I mean, they don't. They look at other Americans and TikTokers and, you know, you name it, and, you know, people that have all these nice things are like, I don't want to go back to, I don't want to go to a 9 to 5 in a plastics factory. And anyway, this is a really long discussion.
Makes sense. You can't blame them, right?
Yeah, you know, you can. And China's got the same issue now, and and if they don't stop down the road that they're going right now, it's going to get worse. And China's going to have a difficult time reverting back to being more of an exporter. Anyway, I want to go over a couple of setups because I could talk for hours on this particular subject, and I don't want to because it's not relevant for today. What's relevant for today is you got the sterling breaking back below 130, and you got us pushing back. And by the way, if you want these types of conversations, Steve is on the Morning Edge after we do analysis and do all of these instruments. We cover all these instruments. You can talk Steve's head off about macroeconomics if you want to in our ForexAnalytix community. But we go through these technicals really quick and get all these key levels, and then you know, Steve
will keep you straight because Steve
will talk your head off.
No, I mean, he's Mr. Confirmation. He never anticipates stuff. He waits for things to really show their hand before he commits. 100%. He does, and that's important. I still work on that. Okay, I try and get what's called an edge. That cuts my throat sometimes, trying to get the edge instead of waiting for confirmation. Steve, when he used to be in here and do the whole review, and we were an hour and a half show, it kept me straight. So I'm telling you, and I know how to trade. So if you don't know how to trade, it's more important to, you know, stay, you know, have that discipline. Anyway.
There you go. Hey, so real quick, I want to talk about the sterling. And by the way, Steve, are we streaming this morning?
No, we're not, mate.
Okay, good. Make sure you give us a heads up about that.
I will. I told you that I will.
Thank you. So sterling is coming in at 128, 128.50. I think this is going to be really, really critical support for the pound, and I think we get there today. I think we test this breakout point, and that's going to test the resolve of longs, in my opinion. If you notice the Kiwi broke down following the CPI data that was stronger last night. I actually went long some Aussie Kiwi on that dip. And then I sold it as we got back up here. I did not expect the Kiwi to continue under pressure like it has. The Aussie has come under pressure as well. We got a double top developing here. So support's going to be around 67.20. And watch this dollar yen, because I think we're developing a bear flag pattern. I think while we're below 140.25, which is a 38% retracement, we're developing a bear flag pattern. I like to, you know, I'm well, if you're in the ForexAnalytix community, you already knew that right here, about 30 minutes ago in the trades room, maybe about an hour ago, I said, you know, sold euro yen and sold sterling yen about 423. That would be exactly 1 hour ago. So you can look at your charts and see where we were at an hour ago in those pairs. So you know, I think we are developing a bear flag pattern here, and I think that if we do get some tweaks of yield curve control, we'll see a move below 137. So I think that's what we'll be looking for. Going back to equities really quick, the NASDAQ. So we hit the 161% extension of this is the last leg lower in that bear market that we were in last year. So we just hit the 161% extension yesterday. So it'd be interesting to see how we react around here by the end of the week. I think if we get back below like 15,200, that's going to be quite bearish for the market. I don't know if we're going to do it, but that's something that when you start looking at price action, you go, well, there's a reversal in price action. That's what we should be looking for. That would be it. It'd be like, you know, close lower on the week is what I would be looking for in like the NASDAQ. You got the gold market that has completed the inverted head and shoulder pattern from last week, and it's up against really key resistance. It's not I don't think this is a great time to be on the long side of gold. I mean, if you didn't get long, you know, on the breakout above 1940, you're paying a nice little premium at this point, and especially with the dollar is really correcting from being oversold, which is been the risk all week. Something that we've been talking about is hitting the 127% extension and bouncing back to 100.80, which looks like we are doing right now. That's you don't want to be long gold if the dollar continues to correct. But anyway, those are just some quick views of what's happening in the markets. Ryan, what is your best trade setup for today? What are you looking for? I mean, you already killed the euro sterling shorts this week. You already killed the shorts in the dollar yen this week from down here. What are you going to do next?
I'm in management mode for this one. I'm going to see how 140 in dollar yen. We've had a test. We had a failure so far. I'm going to see what the pullback looks like. If we hit 139, 139.10 and it holds there, I might add back into my longs. Otherwise, if we get up to 140 again and can't get through, I'll probably take a bit more off the shorts. But I want to try and run this through the BOJ next week.
Yeah, me too. I want to wait. So you're going to run long yen or short dollar yen into the BOJ?
I'm currently long dollar yen.
We're going to be on the opposite sides. Okay, all right.
After those two trades, Ryan really doesn't have to do anything for a month.
Right.
Sometimes you make your month in a couple of trades, and
the wife might hear you, Dale. The wife might hear you.
All right, I don't want to jinx you. I'm curious how many in the room took advantage of Ryan's idea on euro pound or long US dollar yen yesterday.
I was so irritated. I actually, when we got the close, you can to read the analysis here, and I was like, okay, I want to be long euro yen or euro sterling going into into tomorrow's or today's inflation. No, so I when we closed, I actually I put in a little bid just to get long on a dip. Never got hit, and then of course it just launched. I mean, it never even dipped yesterday, like going into the European trade. So great job, Ryan. Really good job.
Well, we have data in 3 minutes.
We have some housing data. Steve, you have any fresh ideas? I know you're more of a swing position trader. Anything you thinking today?
Yep, that's exactly what I am. But I think that other than the reversal that we got in the pound, everything else more or less seems like we maintain the trends we had. I think that the dollar, until proven otherwise, is in a downtrend. Yes, there are going to be counter-trend moves, but it is in a downtrend. Equities remain very, very well bid. They keep grinding higher, breaking one level after the other. So I don't foresee any big changes in the days ahead. And don't forget, it's also summer, right? So liquidity is rather limited. And unless we get some kind of a surprising outcome from somewhere, I don't really foresee that people are in the mood to really start pushing the market in opposite directions.
Yeah, volatility is still really low.
Yes,
although daily sentiment index is at 11, it's still really low. Hey, Dale, what thoughts do you have going into today's data?
I think the dollar bounce has more, and I think the yen will trade 141. It looks kind of ugly here at 140, but I think there's more upside.
Everybody's against me.
Yeah, up around that moving average, Blake, between, that's 41.17. I would try it at 50%.
It's almost like you and Ryan hate me.
No,
I'm just joking.
Who doesn't?
I'm just harassing you guys.
We love you. And
I could give a crap less. I like being on the opposite sides of people from time to time. I like a little
I don't like a lot of company.
No,
don't you feel uncomfortable?
I want to be the only one long yen right now. By the way, just so you know. All right, so I might be. All right, so we got data coming up, just some housing data, which, by the way, I expect building permits to be a little bit stronger. Housing starts, I expect them to, I don't know if they're going to be a little bit stronger necessarily today, but they should, with our housing issues that we're having with the limited house. If I was a home builder, I'd be building the crap out of and they came in worse than expected.
I'm expecting that the housing report is going to say if you're renting, you'll be renting forever.
Yeah, that sucks for our youth.
A lot of people. Yeah.
Yeah, I was just watching a news thing about thing on the news about UK housing too, and it's really, it's really tough for
you might
people
get some
that don't own
deals in
homes.
Canada and Australia and where countries that had adjustable and not 30-year mortgages.
Yeah, yeah, exactly.
But not here. You have to leave the U.S.
Here in the U.S. Not unless you get rates back down below 5.
No,
It's going to be
a depression.
tough. Yeah, I mean, well,
you got to bankrupt BlackRock and all the hedge fund landlords to get them to puke inventory.
When the housing market starts when the labor market really starts to sour, and we will get into a cyclical point where we start to see job losses that could force the hand of some people to sell homes, but this is going to be tough. This is going to be a tough one. Hey, anyway, we just real quick, yields are coming down just a little bit. Stocks are really unchanged following the data. I think yesterday's data was the bigger data with the retail sales that moved the market. And I think we're going to have to watch earnings. Remember, we have Netflix and Tesla after the close. A lot of bank earnings this week. Ryan, I want to say great trading, really great trading over the last couple of days. But what do you got? What do you got for me today? What have you done for me lately, Ryan? I want today. Now.
You're only as good as your last great idea.
Exactly. You can have it after I've got out. Thanks, mate.
All right. Great job, Ryan. Steve, I like your new microphone. You sound great. You sound almost sexy, but you're not. So good job.
My wife disagrees with you.
Well, she would be the only one to disagree with me.
Probably.
But that's the only one that matters.
Love is blind, bro. Love is blind.
And,
anyway.
Dale, thanks for guiding us every day. And excited. You guys stick around for Adam Button. Adam Button's always great to have here from Forex Live. Love to hear his insights. So Dale, have a great interview. Adam, welcome to the show.
Hey, Adam Button, Adam Button, my trading warrior brother. How are you?
I'm doing good. I'm happy to be here.
It's good to have you.
There we go. We got a little video going here today.
All right. So I'm going to share my screen here. And why don't we start with what's top of mind for you, Adam?
I mean, the thing, but I look at the euro right now, 8 days in a row up into yesterday. If you were looking for a chance to sell the euro, I think it's it. We're here. UK inflation rolling over a little bit. I mean, maybe they're talking about 6.5% rates there. Maybe that was a bridge too far. And it just puking today. So I don't think it'll be the last spot to do that. And it really just, maybe the dollar's not done. I mean, you guys were just talking about housing and stronger in the US than elsewhere. And that's kind of been something I've been saying all year.
Yeah, you were more bullish U.S. housing than anywhere else.
But I mean, it was lonely. It was very lonely to be bullish on U.S. housing, and it's been a great trade. And I still think it's early innings. I think this has to be a bubble, and I think maybe some people would argue it is a bubble, but I think I think U.S. house prices can rise 30% from here. And
what do you think the Fed thinks about that?
Yeah, they're going to have a hard time. I mean, it's supply constrained, and especially in a lot of markets, it probably will cycle back into the bigger markets. I think at some point.
What do you think the Fed thinks about this rally and speculation in equities going into their meeting?
Yeah, I mean, they look at.
Go ahead.
It depends if it broadens out. I think they look at the AI story the same as everyone else and say, well, it's just kind of a money pouring into AI. And it is technologically impressive and amazing. And so, you know, we're not going to worry about it too much. Now it's starting to broaden out a little bit, right? We're seeing, you know, what is the Carvana today and you know, Bed Bath and Beyond yesterday and that kind of thing. Maybe
Low
that starts to get a bit
floaters.
worried.
Yeah.
But I know
Yeah.
we've seen it before and it just doesn't seem to bother them. So,
Yeah.
you
So
know,
the Fed should embrace non-inflationary growth, which is kind of what we have with the inflation numbers. Although the comps were easy to beat last year's numbers, right?
And I
So
worry
that's
this
what
was
people
it,
are
right?
ignoring. Go ahead.
This was the best month for comps. I mean, this was the peak. June, which is the data we just got, was the peak of U.S. gasoline prices a year ago. So the comps get tougher now for the rest of the year. Then they get easy again at the start of early 2024. So I don't know if you want to look kind of, you know, we see a bit of the market starting to, we start to get some 0.3, 0.4 month over month numbers. The market gets worried. Or if the market says, you know what, we're going to hit some easy comps again in January, February, March, maybe I can look through this. So that is a bit of a challenge. But the U.S. economies, I think the divergence trade is going to be the trade for the rest of the year. And then I wonder how that feeds back into the U.S. and inflation in the U.S., right? If the U.S. is the only place that's strong, well, you're going to get a lot of exports to the U.S. At competitive rates, whereas if it's fumbling here in Canada and Europe and the UK, I mean, China doesn't want to seem to hit the gas pedal here. So that I think it's a strong dollar trade is going to be the second half trade. Not that it wasn't the first half trade, but I don't think it's over.
That's interesting. Where are you with yields, Adam? A lot of people think that we could have a move like we had from here to here to 330, you know, double top. Do you think we're going back to 330? Personally, I don't think so.
Yeah, I'm a buyer. I'm a buyer a bit right now, just because I'm worried a bit about equities. Right, we're kind of you get this July seasonal strength here. It's a little, you know, earnings season. We'll see about margins. You know, there might be some pressure on that, and I'm kind of tiptoeing into the bond market here, expecting lower yields. But I mean, the way Europe fell yesterday was interesting. I mean, today down like Italian yields, I think, are off 43 basis points in a week. 10's down just below 4% now from 440. And you know, that's some pretty powerful move. And I think, you know, that's sort of the inclination, right? I think there's a lot of money out there that would like to own bonds, but they want to kind of top ticket, right? And then the dam breaks and we go.
Okay. And you're, you know, kind of seems to me that your narrative about being a little concerned about equity prices here and wanting to tiptoe into the long end of the curve.
Well, that's it.
Kind of is tied in together, that it could be a risk-off event that generates a nice move in bonds the way they used to work.
I mean, I've been super bullish on the economy all year, and I've been bullish on stocks as well. And here we are. You know, it didn't quite play out. I thought you'd see like kind of cyclical stuff do a little bit better, not just insane rally in tech, but I was pretty optimistic. And now you start to see all these notes, you know, from economists say we continue to believe there will be a soft landing and are raising our S&P 500 target. And you say continue to believe since when? Last week? Because you guys were all saying it was a recession. And you know, so that you kind of had, now everybody's kind of on the soft landing trade. And, you know, now you kind of got to go to where the puck is going, right?
This is where money's going. It's going into the old economy stocks. Look at CAT, look at Deere, and they didn't start performing until June.
Look, you know, and so that's kind of the debate, right? Is it early on that, or do we now get the cyclical thing? Do we get stocks to the highs? You know, so like I say, I'm still very long equities and like that trade, but you know, I am getting a little bit nervous. Like, look at those candles. That's pretty aggressive in the last, I don't know, the dailies.
Well, you know, these look tired to me, Adam. We had that Prime Day, and Amazon gapped up, but tried to.
How many times does that trade work?
Yeah, it looks like exhaustion to me. Nvidia's been the superstar, right? And
crazy. What's the multiple now? We had 50 times sales yet?
I've heard that we've had record insider selling in the video.
50 times sales.
Record insider sales. So, you know, AMD, here's another semi that doesn't look that great to me. Takes out that
Intel had
moving
a nice
average.
week, but there's a bit of value there.
I think they're rotating out of tech.
Well, there's that NASDAQ rebalance, right? And there's been a bit of talk about that, right?
All right, explain it to me. How did they reduce the influence of Apple in the NASDAQ 100? How do they do that? In what way do they rebalance this?
Well, they say, I think there's something like 44% of the index right now, or 46.
Just
and
Apple.
So they just say we're changing the index, and these are only going to be 38 or something like they're 35. So now if you own it, now if you don't own if you own the ETF, or if you're managing the ETF, or you're tracking it, now you have to change all your balances. So now only 40 or 38% or whatever your portfolio is. I'm not sure on the exact numbers.
So you have to sell some Apple to get down there?
Yeah, and you got to buy some like Broadcom or whatever else is in the index. It's not but it's been really front run. And, you know, it's like, you know, I think a trade like that, once it's well known, but it's the 24th, man. I'm just getting back from vacation, so I'm not dead on these dates, but the 24th, I think, is the day it happens. So, you know, watch after that, and maybe there's a bit of uncertainty around all that. But I do like the broadening out idea on the soft landing. And you asked, is Powell worried about stocks? And when I think of Powell, I imagine he's worried about his legacy. And his legacy right now is the guy who let inflation get away. He's transitory Jay, and he wants to be soft landing Jay. And, you know, if it means that stocks have to have a bit of a bubble, but he gets to claim that, you know, he was the guy who brought inflation down without a recession, I think, you know, he'll take that all day, every day.
Okay.
You know, nobody minds when stock prices are high. It's when they bust that people mind.
I wanted to ask you about copper. It's been a kind of a non-performer here, and I know long-term you like it. They can't, there's no new capacity coming online. It's very difficult to build a mine. To me, it looks like it's on the verge of breaking down. Is it China? I want to ask you, Adam, China was given credit for helping pull us out of the Great Recession because they were
there's no doubt about that.
Could they drag us into it?
Well, that's it. And I think I saw a thing pop up about cat and that and deer, and there's hope. That's a China story too, right? And this stimulus talk, and people just, you know, this week they came out and talked stimulus, and you wonder if the market was pricing in something more aggressive. I mean, there'll be an RRR cut probably this month. That's a rate cut from them. You know, in 2008-9, they went insane. I mean, the amount of stimulus they pumped into everything, it truly saved the world economy. And you know, that playbook's dead. But like, there's somewhere on this scale now of stimulus to, you know, that up here and, you know, the very minimum. And they kind of are just probing this bottom end, and people want to see something a bit more aggressive. And it's been kind of instructive to me at how skeptical the market's been, or if it's, I'm getting it. It's tough to, I mean, you know how tough the China trade is. I mean, the commentary never matches the reality. The numbers are hard to believe.
They're opaque.
But copper really is a 2025, 2026 trade. You know, there isn't a supply crunch. There's lots of supply coming on this year. Next year it will tighten up a lot, and the year after is when you start to get material shortages. So for me, it's, you know, how early do you want to be? And if you're comfortable being early, that's fine. I mean, I think the equities will run ahead of it, and there's some M&A starting in copper equities right now, so that kind of plays into it, like COPEX or something like that, rather than the commodity itself. I think there's multiple expansion that's going to come before that.
Looks like $3 is coming before that story in a few years.
Yeah, and I think that a lot of people want that, right? I think a lot of people are saying, you know, there's no real material shortage of copper right now. Inventories are tight, but maybe I can get $3 or sub 3 is tough because the marginal costs have moved up a lot because of inflation. But you get down to 3. It's hard without a U.S. recession or with China. You know, China has a lot of bullets right now. They have no inflation, so they can stimulate. I don't think they'll tolerate.
Well, yeah. So what are they waiting for?
Well, that's the question, and it's a bit of a puzzle right now. And I think they're coming, but they're just not coming hard enough for the market.
They're talking about that unemployment among 25-year-olds or so, 20-year-olds. That massive unemployment, 20%, 25% of them are unemployed. I think they'll be employed in the army.
Well,
they can't find wives. They can't find jobs. Let them fight. That's probably what's going to happen, don't you think?
I mean, there was a great story in the New York Times last week about the U.S. cutting off chips to China. And it really opened my eyes a little bit to, it's not just chips for AI. Chips are really what you use to invent anything right now. If you're pharmaceuticals, it's not like the nutty professor mixing chemicals, trying different things to make a new pharmaceutical.
You have any flubber?
Yeah.
Fred McMurray.
It's massive amounts of data being crunched by AI chips, the best chips there are, and it spits out kind of the answer or a few potential paths. And it's like that in a lot of invention right now. And so China is really being cut off from all of that. And will they tolerate that? Or, 2/3 of the world's chips are built in Taiwan. And
that's right.
Take it. So that is it. That's an it. I mean, like you say, but nobody knows, right? You can't, how are you going to trade a war there?
What do you think of this new, be short Apple? What do you think of the new currency that is, I believe, is going to launch, or I'm hoping that's all that's launched, like August 22nd, the BRICS gold-backed currency? Is it going to be a tradable instrument? What do you know about it?
Yeah, I mean, I think it would be the gold would be the trade there. And, it was impressive yesterday, the day from gold. Yeah. It was a nice, we're sitting, we're at a period of seasonal weakness for gold, and it's held up pretty well here. There aren't a lot of believers in gold. And, I think Citi was out yesterday talking gold. I mean, all these BRICS countries, I think, so you look at what happened with China and getting cut off from chips, and Russia getting cut off from dollars. And, even South Africa kind of leaned out and is dealing with Russia. And so, Brazil, I don't know, maybe a little bit more in the US sphere, but there's certainly, the Middle Eastern countries want to get involved in the BRICS too. So, that's quite a few people that are saying we were trying to get away from the US dominated system or have something with a little bit more. So there's, certainly an opportunity there, but to execute, again, you look at what the US is just doing on chips to China. I mean, they're cutting them off from chips coming out of Holland. One little component that's US made or US owned in any part of the manufacturing process, the US is saying you can't send it to China. So
and we are so reliant upon them for pharmaceuticals. Or I heard if a big transformer goes with our grid that's not in great shape, we don't manufacture them. It could take months if they come from China. China could hurt us more by cutting off what they sell to us than we are hurting them.
And it's like the word, Russia, it's always who could take the most pain too, right? I don't know if the American.
Well, I guarantee you the Chinese can take more pain than Americans. All right. I guarantee you we're not tested like they were. At least my generation. The uppies, maybe some went to Nam. They've lived in an era of prosperity. Yeah, there've been bumps, there've been recessions, but a lot of them have very comfortable retirements and they're doing okay. While hardship in China has been a national theme forever. Right. So yeah, I think I wouldn't want to fight them.
Yeah, well, it's interesting if they go to the same playbook as Russia, right? And then that'd be the big schism in the world. And so, but it just seems like, why would anyone want to go down this path? But I don't know. Yeah. That's where we're going.
Yeah, it seems that way, that we keep poking them in the eye. It seems that way to you too, right? So Yeah. I want to talk to you a little bit about commodity currency weakness compared to the other currencies, including, while the dollar was making new lows, Canada held up quite well compared to the breakdown in the dollar. And
Yeah, is it, maybe
Aussie
that's
never,
right.
Aussie never took out these highs, while, Euro blew through these highs, cable blew through these highs.
Well, pull
And
up Kiwi there too, because we had Kiwi inflation earlier today, and I thought that
Yeah.
was really instructive. I don't know if you get the short term there, but it tried to rally today because inflation was hot in New Zealand, and it just got snuffed right out. That's the intraday
you
there.
were
You can see it
probably
right on the
looking
far
at
right hand side.
how about a 30-minute chart? This,
Yeah, that was so you get hot inflation, then it gets stuffed. And it's instructive because the UK had cool inflation and it gets hammered too. So like heads I win, tails you lose. And that to me, it's a pretty bullish signal for the dollar. It really comes back to growth, right? We worry about inflation, right? And I think the story in the UK is that you're not going to have as high rates but you're also going to have to crush growth. And I don't think anyone believes that Bailey was really that worried about growth. Yeah, if you listen to him, he doesn't seem to care if there's a recession, unlike Powell, who's trying to engineer a soft landing. And so it's a delicate spot. Yeah, I see that breakdown in the dollar index, like you say.
That's what everyone's saying. So conventional people will say 1,400-point move, subtract it, and that's how people get targets like 85 or so for the dollar.
Yeah, I'm not doing too much technical analysis on the dollar index. I am worried, and if I talk about the whole second half, it would be Japan, right? And even the second half of this month, we have another Bank of Japan meeting. Yield curve control is insane. It's to have inflation that they do right now and still be having yields as low as they do in Japan, and saying that our number one worry is low inflation. I mean, it's just insane.
You sell a rip here, Adam. I mean, this was very directional move from 45 to the breakout at 38. I'm looking for maybe sell rips at 41 or so.
Well, I don't know. Ueda came out yesterday, the governor of the Bank of Japan, and he seemed to indicate that this, they're not going to change anything.
Right.
And so I don't. He's very cagey. He's new, so the playbook is not really well developed. And I just think you stay up late on the 28th or 29th and trade the news.
Yeah.
Okay. As simple as that. But I think it has to go. I don't know. That probably dipped, from 145 to where we are now, 139.70. Yeah. A lot of that is pricing in the end of yield curve control.
Could it also have something to do, if this continues, say we get this just a failing rally and we break out 38, I mean, if I wanted to really get macro about it, I could say we could have something like this from here, or at least re-challenge these lows here. So does this create problems for the carry trade?
Well, you see a lot of action in the Swiss franc too. So there's a lot of angst around the carry trade and how it's set up. And you've got to imagine the funding in yen is, I mean, if you can borrow in any currency right now for nothing, it's tempting.
That's the one. So that could be an unwind if there's the chicken or the egg. The carry trade gets under pressure, and they start liquidating stocks, or stocks are liquidated and the carry trade is unwound.
Yeah, and then you wonder though, okay, they take out yield curve control and rates go up a little bit, but it's still, the Bank of Japan's not raising to 6% or 5% or even 2%. So maybe you hunker down and tolerate it, and the specs get blown out and you get 500 pip move, but then back in, right? Because rates are still lower there than elsewhere. So I think the second half story of 2024 is all about Japan and China. Because there's just so much uncertainty about policy and the economies there, inflation in Japan and growth in China. are the two big question marks in the world right now. I can say pretty confidently that growth will disappoint in that commodity block and in Europe, but China and Japan, total wild cards.
Okay, well, that's that's a great headline. Second half story, stay focused on Asia. Asia's the key. More important than what's happening in Europe. Anything in Europe you want to pay attention to? You worry about more intensified or the Ukrainian war escalating?
Yeah, I mean, that's just not going to end. I mean, you wonder right now if that ends up being like a 20-year war, because it's just something has to change on the battlefield, technology wise.
Well, it is cluster bombs
Wow.
and training F-15 pilots. That you don't think that would change the battlefield? Russia thinks it will.
Yeah, I mean, I don't know. I mean, it's either drones or nuclear weapons. I think that's how it ends, with some massive amounts of drones.
You sound like Dale Pinkert, Adam.
Well, I maybe at some attrition's a funny thing. It eventually people get fed up on one side or another too.
Yeah.
So
I never get fed up talking to you, buddy. In fact, it's too long in between times, and I want people to be following all the great work that you do at
loving these
Forex
comments
Live.
coming in. I'm reading these comments coming in. I mean, but right now I think it's short euro is where I'm at. Yeah, it could be
over the pound,
short
over
sterling.
the pound, huh?
It's a dollar. I mean, I don't mind either.
Okay,
but,
because look at this. I mean, it looks like we have a pretty nice little breakout on the daily on euro pound, and that would make the pound the preferred short, right?
Well, I mean, that's a tough economy to read. Those inflation numbers were hot for a while, came down. Maybe this peak inflation in the UK, and it is a good sell right now. But the Bank of England is just so aggressive.
It's gold. Are gold and silver gonna rocket to new all-time highs?
I think it's early. I'm like a late Q3 guy on gold when the seasonal trade kind of amps up. But I think Russia's buying, China's buying, India's probably buying.
So maybe one more dollar rally, and we actually get a chance to buy gold. Maybe around 1800.
I think ultimately you'd be happy buying it sub 2000. And if you can wait it out, that's a timing trade. Like even at these levels, I think ultimately you'd be happy. But
how about I'd be happy buying it right there.
Yeah, if you bottom take it, that'd be great. I don't know.
I'm thinking if we have that dollar rally you're talking about, maybe that drives it.
And we have had a dollar rally this year, right? Already, and gold has weathered it pretty well. So
yeah,
I think there's a lot to like in all the commodities. And I'm an oil bull, and that's
I know you are. And
bit.
WTI has turned pretty positive lately.
Sure, and I think it's probably early. I don't have a ton of conviction in it at the moment. We'll see what there's an EIA number coming out today. We'll see if we start to get some really material draws. I mean, then you kind of have a problem, right? Because OPEC's not maxed out. You can't be very bullish on oil. I mean, beyond like 90, if OPEC still has.
I'm thinking 80, 85. Look at the 200 right here. It's on the verge, isn't it?
Yeah, it would get going. I mean, specs are short. There's lots of room to run, but still, OPEC is going to cap any of it. So
I think these are the commodities to be paying attention to. I probably don't do a lot of coverage of grains at Forex Live, do you?
No, I would. That's another asset. Gentlemen don't do softs, Dale.
All right, well, here that was wheat. There's beans, and even corn is coming out of the hole here. So you know what? You can't eat copper or gold.
Think steels. I was a bit bullish on steel.
Steel, okay. Things you
could
drop.
Lumber is a housing trade.
Okay. Yeah, I don't even follow it anymore. I remember that lumber pit. They were, when it was open outcry, they were like known as the villains. They you have to be careful with your paper in there. Great talking to you, Adam. I hope you have a great summer trading season. Last thought is a China-Japan watch.
I mean, if I'm, yeah, China Japan watch, and if I'm watching today, I'm just curious to see the U.S. dollar price action and how it goes from here. Pretty good day for the dollar so far, and
Yeah.
maybe something to build on. And like I said, you haven't had many opportunities to buy a decent dip in the dollar. This might be as good as it gets.
All right. Well, Adam Button, journalist, news trader, and great public speaker, and excellent ideas. Really a pleasure talking to you, Adam. So
Likewise, Dale.
yeah. So keeping
Have a great
beans
summer.
in the, yeah, you too. You look
Enjoy
good.
the heat.
Oh my God. What's it like in Montreal?
It's hot here too. It's hot here too. Right?
Really?
So,
what is it? 90?
well, I don't. We use the metric system over here. Dale.
Oh
It's been
yeah,
it's been
Celsius.
35. I don't know. 35 is maybe 89, 90.
Yeah.
90.
Boy, that would, I would love that. I'd have to put a jacket on. Anyway, thanks for the weather report and the report on what you're seeing in the markets today, Adam.
Pleasure, everyone.
All right, my trading warrior brother, Adam Button, everyone. Follow him on Twitter at FX_Button, and go to check out Adam's writings and his views on Forex Live, and include it in your intelligence gathering. I do. Take it easy, buddy. See you, Adam. And you could join the team in 14 minutes on the Morning Edge. That's a wrap. Everyone, good luck today. And remember,